朋友们，锂矿这2年真的混得够惨的。
Lithium mining has really been struggling these past 2 years. We all know that in the lithium mining industry, there are the Dragon and the Phoenix twins, Tianqi Lithium and Ganfung Lithium. So what have these two brothers been up to recently? They've been competing to see who's losing more. Ganfeng said, "I've had 8 consecutive quarters of decline." Then Tianqi chuckled and replied, "I've had 7. China's lithium industry leaders Tianqi Lithium and Ganfung Lithium both suffered huge losses in 2024. According to their annual reports, Tianqi Lithium's 2024 revenue reached 13 billion, a 67.8% decrease year-on-year. Its net loss amounted to 7.9 billion yuan, translating to a daily loss of over 20 million yuan, marking the worst loss since the company went public in 2022. Ganfeng Lithium's 2024 revenue was 19 billion yuan, a 43% year-on-year decline. Its net loss was over 2 billion yuan, marking the company's first annual loss since it went public in 2010. After the release of their annual reports, the stock platforms in China, such as Snowball Finance and Guba, were flooded with complaints. Chinese media even reported that Lithium's 300,000 shareholders were in tears. However, in the first quarter of 2025, both lithium giants' actual revenues continued to decline. Tianqi Lithium achieved 2.6 billion yuan in revenue in quarter 1, a 0.02% year-on-year drop. Meanwhile, Ganfeng Lithium posted 3.8 billion yuan in revenue, a 25.4% decline year-on-year, with a net loss of 360 million yuan. According to an article by Sina Finance, in 2022, both lithium kings made profits of over 20 billion yuan. Tianqi Lithium made a profit of over 24 billion yuan, and Ganfeng Lithium made a profit of 20.5 billion yuan. In the past 2 years, the two companies have made over 64 billion yuan in profit, surpassing their total profits for the past decade. A report by Financial Street stated that the lithium carbonate industry chain mainly consists of upstream raw materials like lithium ore, midstream lithium salts, and downstream products and user consumption. According to 2024 financial data, lithium mining companies such as Sanong Lithium, Ganfung Lithium, and Tianqi Lithium all incurred losses ranging from a few million to several billion yuan. In terms of net profit growth, all lithium mining companies except for Yongshan Lithium showed a decline in profits. By the first quarter of 2025, the difficulties of lithium mining companies had not been resolved. Ganfeng Lithium recorded the largest loss of 360 million yuan, followed by Sanong Lithium's loss of 160 million yuan. Notably, Longshan Lithium, the only company to achieve profit growth in 2024, reported a loss of 29.5 million yuan in quarter 1 of 2025, reversing from profit to loss compared to the same period last year. Tianqi Lithium mainly engages in the development of lithium ore resources, lithium product processing, and sales. The company's products are widely used in electric vehicles, 3C electronic products, and other fields. As of May 30th, 2025, Tianqi Lithium had 280,000 shareholders, a decrease of almost 1,500 shareholders from May 20th, a 0.5% decline. This marks the third consecutive period of a decrease in shareholder numbers for the company. As of May 30th, 2025, Ganfeng Lithium had 289,000 shareholders, a decrease of 244 shareholders compared to the previous period, which was May 20th, 2025. Looking at the stocks as of July 2024, the 7 lithium-listed companies, Tianqi Lithium, Ganfeng Lithium, Sinomine Resource Group, Yongxing Special, Chengxing Lithium Group, Sichuan Yahua Industrial, and Yongjico, saw a market value loss of over 620 billion yuan compared to their high points in the past 2 years. At their peak, these 7 lithium companies' total market value approached 800 billion yuan, with the 2 biggest lithium kings each exceeding 200 billion yuan. Ganfeng Lithium's highest market value nearly hit 300 billion yuan. According to a report by Min Mineral Security, in 2024, the 12 A-share lithium-listed companies reported a combined net profit of 5.8 billion yuan, an 81% decrease compared to the previous year. The gross profit margin of these 12 lithium companies in 2024 was 25.4%, a 14.2% decrease from the previous year, while the net profit margin was 4.5%, down 11.6% from the previous year. These companies saw a significant drop in profitability, their gross and net profit margins falling to their lowest levels of the current cycle. The report noted that the continuously declining lithium prices in 2024 have further squeezed the profit margins of these companies. By 2024, companies like Jiangte, Yahua, and Chengxing were selling lithium salts at prices lower than or close to the production costs, leading to gross margins that were zero or negative. As of 2025, lithium prices continued to fall, putting pressure on companies like Huayou and Sinomine, which had previously benefited from cost security in 2024. It's not just these upstream industry leaders that are facing losses. In the downstream lithium battery industry, many listed companies have issued asset impairment announcements, indicating widespread profit pressures and the risk of reported losses. In 2024, more lithium battery companies went bankrupt, leading to significant financial collapses. According to Century New Energy Network, in December 2024, Xuxiaming New Energy Materials Company Limited in Xisha County filed for bankruptcy due to debt issues, and the court officially accepted its bankruptcy application. Xuxiaming's factory ceased all production. Xuxiaming New Energy was established in March 2017 with a registered capital of 3 million yuan, and it was a lithium battery anode material company. Hezhong Technology announced on December 18, 2024, that its controlling shareholder and actual controller, Liu Zegang, was facing judicial auction of his 51 million shares in the company. The second largest shareholder, director, and general manager Wei Chang's shares totaling 29 million shares were also being auctioned. The fourth largest shareholder, Zhang Renzhen's shares were also up for auction. This led to a shift in the company's control. Hezhong Technology was founded in 1997 and operates its two main business segments, power and lithium battery cathode materials. On October 28, 2024, the National Enterprise Bankruptcy Reorganization Information Network reported that Anfu Guolinu Energy had fallen into severe insolvency, and the court declared it bankrupt. The confirmed debt amounted to over 19.4 million yuan, and the auction of its 40 production equipment units brought in 823,000 yuan. Its major shareholder, Kong Lihua, who held 75% of the shares, had been listed as a dishonest person subject to enforcement, and the company was deregistered at the end of 2023. Anfu was established in July 2018, and its operations included the development of new energy products, technology research and development, lithium-ion batteries, and related products. At the end of September 2024, Sound Environmental Resource announced that Sanong Energy Company had filed for bankruptcy reorganization. Sanong New Energy was established in December 2011 with a registered capital of 3.2 billion yuan, specializing in lithium battery cells and battery systems for electric vehicles and energy storage. According to Chi-Cha-Cha, the company applied for bankruptcy reorganization twice, in December 2023 and May 2024. As of December 31, 2023, Sanong had debts totaling 3.8 billion yuan. Why has China's lithium industry faced such significant turmoil? China National Chemical International stated that the intensifying industry competition has led to shrinking survival space for non-top-tier companies, and outdated low-end capacities are being gradually eliminated. Additionally, the production of power batteries has significantly outpaced installation rates, causing an oversupply of batteries and escalating price competition. Tianqi Lithium announced that the main reasons for its performance changes were, first, a significant drop in lithium product prices and mismatched pricing mechanism. Second, the decline in the performance of its key joint venture in Chile, along with tax litigation results that led to reduced net profits. Third, the increased impairment losses. And fourth, an increase in foreign exchange losses. As for Ganfung Lithium, it attributed its sharp decline in performance to fluctuations in the lithium product market, with a drop in prices for lithium salts and lithium battery products. Furthermore, the financial assets held by the company also suffered a price drop during its reporting period, especially the significant decline in the share price of Pilbara Minerals Limited, resulting in a fair value change loss of approximately 1.6 billion yuan. In recent years, global lithium resource capacity has been increasing, leading to fluctuations in the lithium market supply and demand. Prices behaved like a roller coaster. In 2022, lithium carbonate prices soared, reaching up to 600,000 yuan per ton. However, in 2023, the price dropped sharply to below 200,000 yuan per ton. In 2024, prices briefly rose before falling again, dropping to around 75,000 yuan per ton by the end of the year. This represented a decline of more than 85% from its peak. As of late May 2025, the latest price for battery-grade lithium carbonate was 60,000 yuan per ton, compared to around 79,000 yuan per ton at the beginning of the year, representing a 45% decline from the same period last year. According to Anhui Network, lithium carbonate prices are experiencing an unprecedented crash, and this 4-year market volatility has now reached its lowest point. Industry observers note that prices have now fallen below the survival threshold of 70,000 yuan per ton for lithium carbonate products processing companies. With breakthroughs in lithium extraction from salt lakes, production costs are reshaping market perceptions. This cost reduction technology, combined with capacity expansion, has shattered the price support for lithium carbonate. According to a research report from Minmetal Securities, Salt Lake companies currently have a significant cost advantage, while Guolinu Lithium is facing the production of more losses. The industry reshuffling has entered its countdown phase. The sharp drop in lithium prices has directly impacted Ganfung Lithium's core business, sales of lithium salts and lithium batteries. The 2024 financial report shows that its lithium series product revenue halved by 51% year-on-year, with its share of total revenue dropping from 74% in 2023 to 64%. The gross profit margin was only 10.5%. While the lithium battery business's revenue share increased to 31%, it still struggled to withstand the downward price pressure, with a gross profit margin of only 12%. Ganfeng Lithium chairman Li Liangbing told China Entrepreneur magazine that the company's battery business is mainly focused on the energy storage sector. According to GMEN News, however, this sector is currently facing serious overcapacity issues. High energy storage data shows that by 2024, China's planned energy storage battery production capacity will exceed 1,000 gigawatt-hours, but actual shipments will only reach 300 gigawatt-hours, with a capacity utilization rate of less than 35%. Ganfeng Lithium's expansion into lithium battery manufacturing and its diversified business model may put short-term pressure on its company. According to an Anhui Network article, the short-term market imbalance is unlikely to change, and under such circumstances, Ganfung Lithium has chosen a life-or-death expansion strategy. On one hand, it raises cash flow through bond issuance, and on the other hand, it is trying to acquire high-quality assets at low prices. For the 320,000 shareholders, the biggest concern right now is that they don't know when this will end. If the demand in the new energy vehicle sector does not recover quickly, Ganfeng Lithium could face even greater performance pressure. After all, the company's cash reserves are now lower than its short-term debt, and balancing expansion with cash flow will be a serious challenge. This is a high-stakes gamble for survival. The internal competition phenomenon in China's new energy industry has led to a vicious price war. Between 2023 and 2024, BYD drastically reduced the sales of its car models by up to 17%, forcing other competitors to follow suit. According to a report from the Jiangsu Intelligent and Connected Vehicle Innovation Center, the overall industry capacity utilization rate is less than 50%. The surplus capacity cannot be fully absorbed by the domestic market, further weakening the overall profitability of the industry. When China's new energy industry cannot rely entirely on domestic demand, the surplus capacity has to be exported through a low-price strategy. According to Canalys, the global new energy vehicle market is growing at 27.1% in 2024, and Chinese car manufacturers are expected to hold 78% of the market share. The dual effects of market saturation and weakened demand have forced global EV companies into a price war. New manufacturers like Rivian, Lucid, and Fisker have seen their stock prices crash recently. In order to prevent unfair market competition caused by the massive dumping of Chinese vehicles, Western countries have set up policy barriers, making exports face multiple challenges. In other words, the new energy market is unable to recover, and the lithium industry, represented by Ganfeng Lithium, does not have a good outlook. In this industry winter, the differentiation of companies is becoming increasingly evident. A Anhui Network reported that major enterprises, relying on their full industrial chain layout, are now competing for survival. Ganfeng Lithium is accelerating its layout of the lithium recycling business. Tianqi Lithium is increasing its overseas resource reserves, and contemporary Amperex technology company is exploring a second battlefield through sodium-ion battery technology. In contrast, for small and medium-sized companies, more than 30% of lithium salt processing plants are approaching a critical point of shutdown. Market forecast models show that when the price drops to 50,000 yuan per ton, half of the enterprises will face bankruptcy within 2 years. We have previously discussed the situation of lithium industry giants such as Ganfeng and Tianqi. Now we must also mention the situation of the lithium industry giant in the downstream, contemporary Amperex technology company. On March 14th, the exchange announcement showed that contemporary Amperex technology company's revenue last year decreased by 9.7% to 362 billion yuan, which is below forecast. This was the first time since the company started disclosing financial data in 2015 that its annual revenue has declined. At the time of this financial report release, contemporary Amperex technology company was planning an IPO in Hong Kong, aiming to become the largest IPO in Hong Kong since 2021. Bank Vontobel analyst Andreas Venditti stated that this IPO plan shows that although contemporary Amperex remains profitable, its slowing growth has become a focal point of market concern. Data from the company over the past 4 years shows that both revenue growth and profit growth have been continuously declining. Revenue for each quarter in 2024 continued to decrease, with the first, second, and third quarters showing a decline of between 10 and 12%, with the drop in percentage widening each quarter. Automotive industry analysts stated that battery technology has reached a certain stage, and the iteration and progress of technology are not as rapid. With competitors closing in, it's becoming unrealistic to maintain a dominant position in the ecosystem. According to the latest data by the China Automotive Battery Innovation Alliance, contemporary Amperex's market share in market batteries reached 42.7% in November 2024, but its market share has decreased for the 4th consecutive month. What is more concerning is that more and more car manufacturers are beginning to develop their own power batteries, trying to seize more initiative in the upstream of the industrial chain. This trend has not only intensified market competition, but also weakened contemporary Amperex's bargaining power. Data from a new network shows that contemporary Amperex reached its peak revenue growth and net profit growth in 2021, after which the growth rate has rapidly declined. With Chinese electric vehicle companies increasingly lowering prices, contemporary Amperex has been forced to reduce battery prices to maintain market share. The company stated in January that the cost of raw materials like lithium carbonate has decreased, which led to product price adjustments and an 11% decrease in revenue. However, the drop in battery material costs was even larger, at 17.6%, partially offsetting the impact on profits. As China's economy continues to struggle, contemporary Amperex is speeding its overseas investments to reduce reliance on the Chinese market. However, U.S. regulatory restrictions pose risks. In January, the U.S. Department of Defense placed contemporary Amperex on its Chinese military companies list and plans to prohibit the Department of Defense from engaging in commercial cooperation with the company starting in June 2026. On March 10th, the U.S. House of Representatives passed a bill that prohibits the Department of Homeland Security from procuring batteries produced by contemporary Amperex and 5 other Chinese companies. CATL continues to face bad news, with declining revenues, regulatory restrictions from the United States, and even temporary suspensions of operations. According to a UBS report, in September 2024, CATL decided to suspend its lithium mica business in Jiangxi. On the evening of September 11th, CATL stated that based on the recent market situation of lithium carbonate, it plans to adjust its production arrangements for lithium carbonate. In February this year, Jiamian News reported that CATL, in collaboration with Longpan Technology, had gradually resumed production at its joint venture lithium carbonate refining plant in Yichun, Jiangxi. Sources inside Longpan Times confirmed that the company is gradually resuming operations. Shanghai Non-Ferrous Metals Network also reported that Ningde Times lithium mica mine in Jiangxi is resuming production. However, CATL, which has an annual profit of over 50 billion yuan, has not gained recognition from secondary market investors. In 2025, CATL's stock price has remained sluggish. As a leading company in the downstream lithium industry, the road to breaking through is bound to be difficult. Gaishi International published an article titled Sales or Profit? The Question of Survival. It pointed out that the power battery industry, in addition to competing on technology and products, is also competing on prices. Coupled with a continuous decline in lithium carbonate prices, the already thin profits are further squeezed. Guotai Junan Securities believes that the lithium battery industry will experience production cuts, suspensions, and bankruptcies. Yang Hongxing, the chairman of S-Volt, also publicly stated that the lithium battery industry is entering a phase of elimination. In fact, it's not just the downstream lithium battery industry that's accelerating its decline, but also upstream enterprises. With China's overall economic downturn and the global oversupply of lithium production, the prospects for China's lithium industry are bleak.